Paolo, good to see you. How you doing? How you been? Tall, good to see you. How you doing? Good evening, Miles CMF. What did you buy when the market crashed? The usual XRP, HBAR, XLM, and XDC pretty much. I didn't go for the rest, I'll be honest. And I did long the market as well on a few of them, which some paid out, some were liquidated. Hi all, good to see you as well. JP, how you doing, brother? Evening, Pure, good to see you as well. How you doing? Good evening, brother Miles. Funky brother, good to see you as well. How you doing? Hi, Miles. Hi, everyone. Hope everyone is well. One Love, good to see you as well. How you doing? Good day, Miles. Mike, let's go. How you doing? You seem pretty fresh. Let's go, funky brother. Good evening, Miles. Welcome back. And hi, CMF Free Forever. Let's go. By the way, thank you so much to everybody who's been liking the live show right now and everyone that's tuning in. What up, Miles? What up, CMF? Ray, good to see you as well, brother. How you doing? Honestly, thank you so much to everyone who has already liked and retweeted this live. If you're watching this on X, and if you're watching this on YouTube, thank you so much also to everyone who's also liked the live as well, and put comments outside the live, because that does help quite a bit. Hi, Miles. Why is the market so dangerous? Mostly to do with Trump's random speech that came out of nowhere regarding the tariff situations on China. Trump coming out essentially saying, he assumed China was going to do something towards the market space that would have impacted the US market space. Then Trump essentially came out and did it first and impacted the rest of the world's market, which put pressure on the Chinese government essentially to come to the table, because Trump just essentially showed his power to the entire world. He doesn't have to use missiles to show the American strength, just crashing the world's economy instead, which, that's why Xi Jinping essentially and Trump are going to be having conversations now. That's why the market is essentially dangerously crashed. Even Miles, but the timing of the market's crashing is quite interesting as well, because we are coming up to the Clarity Act, where institutions and utility, and that's the banking sector and all that's going to be happening straight after the Clarity Act. Interesting that before the Clarity Act, we had one of the biggest crashes the market's ever seen before. This was the first biggest crash we've ever had so far inside the market space. The second biggest was China banning Bitcoin. Before that was COVID. What up, Miles? I know we were here. Even Miles, Jason, good to see you as well. How you doing? Hello, Miles, and we missed you. Let's go, team. Missed you all too. Miles, what think about Beam? What do I think about Beam? It's a good project in the gaming sector. I wouldn't say it's a must-have project, but it's a great project. I mean, I've talked about it before as well. It's a gaming project that has potential in that sector. Why not? If you want to branch out, because you're mostly inside of financial projects and you want to go a bit more towards the gaming and so on, Beam's a good project to look into, is what I would say. Welcome back, bro. Good to see you again. Funky brother, let's go. Good evening, Miles. How are you? I'm doing great. Callie, good to see you as well. How you doing? Good evening, Miles. The CMF. Manny, good to see you as well. How you doing? Good evening, Miles. And you think Trump tweet was just a smokescreen for all the suits and exchanges to liquidate everyone? I think it's criminal. I do agree, yes. What Trump tweeted out regarding China's situation and the tariff policies, and then the crypto market had one of the most biggest liquidations we've ever seen in our lifetimes. Was that manipulation, or was that really based on what Trump tweeted out? In my point of view, both. Yes, Trump tweeting out regarding China's tariff situation is going to impact the market space. However, the way that news impacted the market space was just absolutely ridiculous. So that's why I say there's a bit of both going on. Yes, Trump's tweet regarding China's tariff situation is going to impact the market, but it shouldn't have impacted the market in that sort of scale. That's the odd part about it. So yes, there was definitely heavy manipulation applied to make it much more of a bigger exaggeration story. Good evening, Miles. The CMF Bullocks up. You can see how you're doing. That's what I'm saying. It just comes out perfectly. I mean, we're just about to go into a Clarity Act regulation where it equals the utility, and we have institutions, banks, and everyone wants to get involved. And then we have somehow, Trump tweeting out China tariff news, which we've had before in the past. We've had news come out, Trump tariffing China, semiconductors, 100% tariffs. And we've never had a crash like that regarding Trump and tariff situations with China. To have a ridiculous one at this scale, it doesn't add up. Yes, the markets should react, and they always have reacted to news of that scenario. But the way it reacted was absolutely ridiculous. So yes, my own point of view, heavy manipulation was definitely applied to this news coming out. And it perfectly lines up with the clarity that's coming out next, because this just created a humongous buying opportunity for institutions as well. There was also news going around that BlackRock scooped up $75 million worth of Bitcoin as well at the time. Good evening, Miles. The CMF looks up. Let's go. Facts, the timing was perfect, almost for a complete shakeout. Facts, absolutely. Nice to have you back, Miles. Let's go, Mike. How you doing? Mahdi, good to see you as well. Hello, how you doing? Binance had a big part to play by liquidating all the long positions, all exchanges. Exchanges were not on our sides. In most cases, they're not, to be fairly honest. The house has to win to be able to pay out. Protex RP, HBAR, ton of XLM, AR, World Financial, Link, ACH, and AVAX in the crash. Let's go tour. I mean, a lot of people did see it as a buying opportunity. I mean, if you always wanted to buy something cheaper, scoop it up before it goes back up again, it was an incredible buying opportunity for people who were going for long-term, essentially, holds. 100%. Hey, Miles, CMF, coming to good to see you. How you doing? I heard someone in China put a huge short 30 minutes before Trump's announcements. I heard about that as well, but I didn't know the person was from China. So as far as I was aware, essentially it was anonymous. I didn't know he was from China, to be fairly honest. So I don't know if that's verified either, but I'll verify it for you. But yeah, I heard there was a 30-minute, there's a person 30 minutes before Trump's announcements shorted the market space. The entire thing smelled bad of manipulation. There was too much manipulation going on. Trump announcing tariff news on China has essentially impacted the market space before, and it will continue impacting the market space regarding the biggest, one of the biggest market spaces in the world, which is China. It's going to affect the crypto market spaces, but at that scale, that made no sense whatsoever, because we've had 100% tariff increases on China before, and the markets reacted. But we never had the biggest liquidation, essentially, the world's ever seen inside the crypto space before. So that was just ridiculous, my point of view. I mean, the institutions and the exchanges had an absolute field day slaughtering the retail section inside the market space. But then again, if you play it smart in times like this, it's perfect position for people who want to buy for long-term hold, 100%. No financial advice whatsoever, but it was cheap. Let's just be honest with ourselves. Everything was very cheap. I couldn't even buy anything, and some exchanges froze. Yeah, there was essentially some exchanges that were freezing. Some exchanges were kicking people out when they were logged in, just so people couldn't scoop up anything, or essentially put trades down. Hi, Mazda family, welcome back. Good to see you, Omar. How you doing? I think it's criminal the way it happened. 100% yes. And that is why we need regulations ASAP inside of this market space. This is the reason why regulations are incredibly important for the crypto space, so we can move on to utility, and we no longer have to worry about Bitcoin taking a hit and everybody else goes down with it. Because if we have regulations, this would have never happened at this scale. I'm glad you are back. Hello, Miles and CMF. Peg, good to see you. How you doing? Now, let's go through essentially what's been happening inside the news on tonight's live. And before I start that off, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, a lot of things have been happening, which we're going to cover on tonight's live. And the first one I'm going to be covering essentially is the withdrawal situations that's been going on. Now, there are some positive news to go through on tonight's live as well, already to the crypto space. Funky Body says, honestly, I think its incident should be investigated, so it will not happen again. I agree 100%. Hello, Miles. Good to see you as well, Scott. How you doing? Perfect timing, Scott, because I'm about to go for the first news on tonight's live. And once again, honestly, thank you so much to everybody who has already liked and retweeted this live. It means a lot to me. Thanks so much to honestly everyone who has already liked and retweeted this live on essentially X. And if you're watching this on YouTube, thanks so much to everyone who's also liked the live as well. So if I'm not mistaken, we have 12 likes, 13 essentially retweets. If you haven't liked or essentially retweeted, smash the like buttons on X and smash the retweet buttons on X. Also, now, Bitcoin, Ethereum ETFs both saw tremendous amounts of withdrawal. Bitcoin Ethereum ETFs essentially saw $755 million withdrawn completely during this volatile stage. The cryptocurrency markets began the week on a cautious note as both Bitcoin and Ethereum ETFs in the United States recorded significant outflows. The large withdrawals came immediately after a volatile weekend that saw record levels of forced liquidations in digital asset spaces. According to the data from Farsight, investors, BTC ETFs reported total daily outflows of around $326 million. Among BTC-focused funds, Grayscale's Bitcoin Trust, GBTC, had the largest withdrawal, no surprise there, losing $145.4 million. Bitwise's Bitcoin ETF followed with $115.6 million in outflows, while Fidelity's FBTC recorded $93.3 million, leaving the fund. Smaller amounts exited from ARC21 Shares Bitcoin ETF also, and VanEck's Hold, with $21.1 million and $11.4 million also withdrawn from the market space. In contrast, BlackRock's iShare Bitcoin Trust IBIT attracted $60.36 million in inflows, making it the only major BTC ETF to record net gains that day. Ironically, everybody else was going through out essentially every other essentially, regarding Fidelity or Orc Invest or Grayscale, every single one of these institutions regarding their Bitcoin ETFs were having outflows. Interesting enough, BlackRock has an inflow of $60.36 million, making it the only BTC ETF to record net gains that day. While this addition provided minor offset, it was not enough to counter the overall negative trend across the essentially market space, which is facts. Despite Monday's essentially losses, spot Bitcoin ETFs continue to play a major role inside the market space. Data from Soso Value shows that total inflows into these funds has essentially climbed to $62.44 million since their launch. They now hold $157.18 billion in assets, equal to about 6.81% of Bitcoin's total market value. Over the past week, these ETFs attracted $2.71 billion in net inflows, showing steady institutional interest aimed at the recent volatility we just experienced. Ethereum funds experienced essentially even deeper losses than Bitcoin. On Monday, US-listed essentially ETFs saw combined outflows of about $428.5 million. And so here is essentially a breakdown in terms of bullet points. BlackRock's iShares Ethereum Trust recorded the largest withdrawal it's ever seen before, $310.13 million. Grayscale's ETH products saw a $49.7 million leave their essentially Ethereum ETF. Fidelity followed with $19.12 million withdrawal, and Bitwise and essentially VanEck lost essentially roughly about $12.8 million and $9.3 million. Together, Bitcoin and Ethereum ETFs recorded outflows of more than $755 million. The withdrawals followed a weekend of sharp market swings, during essentially which cryptocurrency liquidations reached records of 20 billion, is what's been suggested. The reality of it was 9.66 billion. The broader sell-off came after President Donald Trump announced that the United States will impose 100% tariffs on all Chinese imports starting November 1st. The decision made it in response to China's restrictions on rare earth material, essentially on rare earth mineral exports, added to the uncertainty across global financial markets. Vincent Liu, the chief investment officer at Kronos Research in Taiwan, said the outflows reflect growing investor caution following the recent wave of liquidations. He explained that many are holding back and waiting for clearer economic signals before taking any positions, noting that recent trading activity has been driven more by market sentiment rather than by underlying fundamentals. Meanwhile, the sharp correction inside the crypto prices has clearly affected the trading behavior. The haven that we're all supposed to be looking up to, Bitcoin, where are all the Bitcoin maxis in times like this? Bitcoin maxis will be essentially inside of the X space to say XRP is a bad project. Bitcoin maxis will go against every single crypto project. When the time is right, they will all pop out of their hide and seek places, and the Bitcoin maxis will come onto X and essentially say XRP this, or Chainlink that, or Ethereum that, or Solana that, and Bitcoin is the best because we are a digital gold safe haven. Gold was up during this tantrum situation we had inside the crypto market space. Why wasn't the digital gold up? Unfortunately, because it's not digital gold. Even though it's been given the title for the longest time of digital gold, gold was up. As I said previously, if we have a war tomorrow with China and Taiwan, for example, out of nowhere, gold will go up. Digital gold, Bitcoin, will come down. Russia and Ukraine go into a war together. What happens to Bitcoin? Does it go up? No, gold does. So I don't understand the title of essentially Bitcoin gets when it's been named digital gold, because it doesn't react like one. It's like calling a Peugeot 206 a Ferrari 458, but it's not one, is it? So, market sentiment data reinforces this caution mood, with crypto fear and fund greed index dropping to 38 from 70 just a week earlier. The rapid change shows how quickly optimism has given way to fear after recent market volatility. So right now, investors, some or majority, are sitting on the sidelines because they don't know how it's going to play out. Because yes, the Fed also did come out and do a speech today. Jerome Powell did his speech, and it was quite neutral. He wasn't negative, he wasn't positive. He also stated that he didn't have a collective of data to go through to give a better perspective on the market space. However, he said what he said, and it was mainly neutral. But we are going to be getting his beige book update tomorrow. So that should give us, as investors, a better idea of what's to come. I mean, in the long run, crypto projects are good to go, especially the ones that have utility. Just the short term, essentially, they're manipulating the hell out of it because they can, because we don't have regulations. And the faster we get regulations, the faster we can detach from the fake digital gold. Sonic CEO is what we're going to talk about next on tonight's live. Sonic CEO says blockchain adoption hinges on stability during market stress. Absolute pure facts. This is exactly what I was talking about, where we need regulations for the market space. So a CEO of a company has come out and said this about the crypto space of what happened last night. Because the stock market went down, the NASDAQ was down, the Dow Jones was down, everything was down, fair enough. But crypto got hit by a lorry, while essentially the stock market got hit by a car or a bicycle. So here it is. Institutional investors are growing cautious about blockchain infrastructure that promises high speed but fails under pressure. Following the liquidation-driven market turmoil over the weekend, Sonic CEO Mitchell said the next phase of blockchain growth depends on whether networks can maintain uptime and compliance standards when volatility surges. In an interview with Yellow.com, Mitchell essentially said that institutions entering digital assets are less interested in theoretical transaction speeds and more concerned about operational resilience. As institutional players enter, the focus will shift from how fast blockchain can settle transactions to whether it can actually stay functional when volatility hits. This also goes back to what I said a very long time ago, when people were coming out and say, this crypto project's better than XRP because it's faster than XRP. And I said to people about 2 years ago, institutions couldn't care less if essentially there was a crypto project out there that was 2 seconds faster than XRP in processing transaction, because it doesn't mean jack squat to them. What they care about is compliance, regulations, security, safety when using a particular blockchain for transactions. And there's no uptimes, essentially there's no downtimes on the network, or any sort of disconnections, or any sort of scenarios of volatility is all they care about. During Friday's market stress, several major networks experienced congestion and failed transactions. This is when essentially certain blockchains will show their true colors. Because in times like this, essentially, if there is a financial blockchain out there, for example, the XRP Ledger, XLM, HBAR, XDC, Bitcoin, Ethereum, Solana, these are times that these blockchains are supposed to shine. In times of turmoil, in times of where markets are essentially struggling to process transactions, or for people to be sending essentially wallet-to-wallet transactions, these are times that these blockchains should shine and show their true colors of they can withstand everything that the market throws at them. So, the industry needs systems that perform at peak loads without shutting down, he said. That's what they care about, the institutions and the banks. They don't really care about if there's a crypto project out there 2 seconds faster than XRP. They just care about, is the blockchain going to work 24/7? The stability is what institutional investors expect from infrastructure they use. And there are certain projects out there that we know for a fact have struggled with regarding congestion. Ethereum has struggled in the past many times regarding congestion. So has Solana. The last crash Solana had was about 4 hours it lasted, essentially, not being able to process payments. So we've had blockchains, but in my point of view, I've always said, when it comes to finance, not AI or Web3 or essentially some sort of gaming projects, no. When it comes to finance, XRP Ledger by a mile is further ahead. When it comes to gaming or essentially AI or Web3, fair enough, give it to the other projects if you want to. But when it comes to finance, it genuinely takes the crown. To address this, essentially, Mitchell said Sonic is expanding its executive team to include specialists in government relations and compliance. The goal is essentially, he said, is to align with evolving regulatory frameworks rather than resist them. We're focusing on building relationships with governments to ensure that the frameworks being established are reasonable for the industry, he said. The shift is essentially in tone reflects a broader change across the blockchain sector. So it's no longer about who's the fastest and so on. It's about who can actually do what they say they can do when it comes to their blockchain. So with Solana saying we can do this, can they actually do it? With Ethereum saying we can do this on our blockchain, can they actually do it? With XRP Ledger essentially saying we can do this on our blockchain, can they actually do it? Regarding XRP Ledger, yes, hell yes, they can do it. After years of essentially competing on speed and through output metrics, many networks are now heading towards reliability, risk management, and real-world interoperability prioritizes that mirror traditional financial systems. Mitchell said institutions will ultimately judge blockchain infrastructures by its ability to stay online during high-volume trading, not by how fast it moves, essentially in ideal conditions. Institutions won't move on chain for promise of speed. As I said also regarding Swift, it doesn't matter if Swift is going to get faster or essentially so on. I said institutions don't care about faster and so on, because if they cared about faster processing of payments and lower fees, so they would have cared about it a long time ago, not using Swift for the last decade. What they care about is, this new system, is it actually going to work? The recent market disruptions served as a reminder that technical efficiencies alone will not earn institutional trust. For blockchains to play a larger role in global finance, they must prove they can withstand the same shock as the systems they aim to replace. Pure facts. Can Solana's blockchain be able to process and do what it says it's going to be doing, even at times of peak? Everybody's using the blockchain, everybody's trying to process transactions and so on. Is it going to withstand it? It hasn't been able to in the past. Neither is Ethereum, neither is Bitcoin, but XRP Ledger has. And that's a fact. Not hating on any other chain out there, because there are some great chains. I mean, ETH has its essentially positives, so does Solana, so does Bitcoin, and so does any other blockchain out there. They all have their positives and negatives. But in this case, XRP takes the crown. Now, Fed Chairman Jerome Powell is what we talk about next on tonight's live. He signals a near end to balance sheet reductions. So, the Federal Reserve Chair Jerome Powell, if anybody saw it and didn't see it, here is essentially what he said in short form. Announced that the Fed is nearing the conclusion of its balance sheet reduction, highlighting increased flexibility in its size moving forward. This decision could impact major cryptocurrencies like essentially Bitcoin and Ethereum through essentially tighter dollar liquidities, affecting investor risk appetite and indirectly altering market dynamics. Federal Reserve Chair Jerome Powell recently addressed the impending essentially end to the Fed's balance sheet reduction, which has been a crucial component of the post-pandemic essentially monetary policy. Powell essentially emphasized flexibility in maintaining a portfolio primarily of the Treasury securities, underscoring essentially long-term streak focus on outline on the official Federal Reserve website. The Fed's approach signals a turning point in monetary policy as the institution prepares to conclude the balance sheet runoff. This could essentially pose and ease liquidity constraints on macroeconomic scales and directly affecting cryptocurrency markets. Immediate implications, including potential shifts in the US dollar liquidity, influencing cryptocurrency risk appetites. Our long-stated essentially plan is to stop balance sheets runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. We may approach the point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. The Federal Reserve monetary policy adjustments could impact cryptocurrency markets through liquidity changes. If liquidity becomes constrained, risk on assets like BTC and ETH may experience increased volatility. The emphasis on Treasury securities indicates a stable monetary path that could bolster essentially USD stability, affecting cross-border crypto flows. Now, some are suggesting that Jerome Powell is actually giving out some sort of hints of potential more rate cuts coming away. Also, we had essentially some interviews happening on Bloomberg, which was suggested that we should be getting 178% tariffs coming our way, which is huge if it does happen. But we're going to have a better idea on the Fed tomorrow when their beige book comes out, because we'll have bullet points to go through on tomorrow's live. But for the time being, that's all we have so far for regarding Jerome Powell. Now, moving on from the Fed to the US government. A lot of people are saying, why is the US government not buying cryptocurrencies and not buying Bitcoin? They don't really need to buy it. They can just seize it from criminals, which is exactly what's happened again. The US government seeks to add $14 billion to crypto reserves as a part of a crypto, essentially, crime case. A US federal court has unsealed a criminal indictment involving a massive cryptocurrency fraud scheme that could result in government increasing its national Bitcoin reserves by $14 billion, which is the biggest pretty much to date. In essentially one of the biggest to date. In today's notice, essentially from the US Justice Department, authorities said they have filed essentially a complaint against the 127,271 Bitcoin, essentially worth of about roughly $14.4 billion at the time of publication of this article. The Bitcoin is tied to essentially indictment against Chen Zi, founder and chair essentially of Cambodia-based company that was allegedly responsible for orchestrating crypto investment schemes. The U.S. Department of Treasury Office and of essentially Foreign Assets Control sanctioned Zi's company, the Prince Holding Group, and its affiliates on the same day the indictment was unsealed. According to the complaint, the US will seek essentially upon holding his assets and pretty much over time being able to add it to their crypto reserves. If approved by the courts following Zi's potential conviction, the Bitcoin would represent one of the most significant additions of cryptocurrencies to the US street reserves since its establishment. The US President Donald Trump set up a national Bitcoin, obviously we saw back in essentially March, regarding crypto reserves and the Bitcoin reserves, but the US is about to be receiving $14 billion if it's approved by the judges. Now, moving on from that to the next news. But before we go through the next news, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions or comments, go through the comment section. More than happy to help you out. Let's see where we're at the comment section first, and then we'll go straight into the next news. Let's see. Welcome. We were here. Yeah, welcome back. I'm glad that you had a safe trip. Let's go, Scott. Thank you so much. Good to see you back, Miles. We all behaved ourselves while you were away. How did everything go? How are your family? Everything's good, Lena, and everyone great, to be honest. Thank you so much for asking. How have you been? I'm subscribing to Mr. Miles. Thank you so much, Matty. Hello, Miles and family. Susie, good to see you. How you doing? Miles the GOAT, Miles the CMF leader. Let's go, Scott. Thanks so much for the kind words. I am holding XRP, XLM, and XDC. Let's go, Scott. Great projects, amazing projects, huge future. Hello, Miles. Welcome back, LinkedIn. Good to see you. How you doing, bro? I hope Trump does not get essentially constipated after his Middle East visits, as BTC digital gold will drop again. Any news? BTC trends downwards. Hi, Miles. Facts, absolutely. Hi, Miles. Great to see you. Artistic, good to see you. How you doing? How's things, Artistic? XRP is now all about privacy, which the institutions love. Absolutely facts. Institutions love the idea of privacy, and the XRP ledger provides it. Good evening, Miles and CMF Group. Good to see you again, Miles. Good to see you as well, Carlos. How you doing? Hello, how is your day? MW, good to see you. So how you doing? How was your day? Sorry, Miles, been out watching England football and left my phone in the pub, so I'm very late on. Hope I've not missed too much. Adi, no problem. Good to see you, brother. How you doing? We missed the green candles. Missed the green candles. It's a fair point. Will the government shut down, delay the XRP ETF? Yes, it will delay all ETFs, to be fairly honest. Scott, thank you so much for the 25 essentially Canadian dollars. Absolutely amazing, Scott. Thank you so much, brother. Straight to the hedge fund. Incredible. Like, comment, and share the live, please. And thank you. Let's go, Peg, for saying that as well. Facts. If you haven't liked or essentially retweeted, please smash the like buttons and the essentially retweet buttons if you're watching this on X and on YouTube. And Scott, Mike, honestly, once again, thank you so much for the $25 donation, Canadian dollars. Absolutely amazing. Thanks so much, brother. Now, thank you. Now, Stripe. When do you think the government shutdown will end? When Trump decides, essentially. Nobody knows what, you can take guesses where Trump is essentially going to be thinking next or what he's going to be doing next. But he does tend to do things on his own timeline. So if Trump is able to get the Democrats to, if I'm not mistaken, we only need 4 or 5 more votes essentially to, get the bill going and the government shutdown ends. So if they're able to get 4 or 5 Democrats on board, we're pretty much good to go. The government shutdown will end and we'll be back to normal. Are the Democrats going to bend the knee for Trump? That, essentially time will tell. However, I do believe that they're going to be doing it faster. They should be doing it, essentially agreeing to Trump's essentially demands, because the Democrats don't really have a leg to stand on. And the longer this government shutdown continues, the better Trump looks in the eyes of the people. As much as the Democratic Party may want to go essentially and say other things on the news, people will see Trump in a better light because they're seeing it as the Democratic Party is the one that's holding everything and not letting the government open, which is true because we do need 4 or 5 votes from the Democratic Party. Also, the Democratic Party, the government, the politicians, the Democratic politicians are too stupid to realize it, which is before, when Trump wanted to do something and essentially put an executive order out, the Democratic politicians would say no and get all different types of judges involved. Now, because of a government shutdown, Trump can pretty much get away with anything he wants, essentially. And he is the president of the United States, so he should be able to do that anyways. But Trump can do whatever he wants now. And the Democratic Party are too stupid to realize that. I mean, there's a reason why the Democratic politicians lost everything, including the presidency, the House, the government, the Senate, everything. There's a reason why they lost it, because they're too stupid and focused on things that don't matter. So, I mean, before, honestly, when Trump wanted to put an executive order out, Democrats would stand up and say, no, we're going to get judges involved and so on. But now, because it's government shutdown, Trump could pretty much sail through. And the Democrats are too stupid to realize it. But it works out in our favor, because if Trump is going to pass crypto regulations, then hooray for us, honestly, because the Democrats can't say no. Now, Stripe's stablecoin arm Bridge essentially applies. So more and more, it seems like fintech companies are coming forward to get bank charter licensing. The new wave of banking is definitely going to be fintech banking. So Bridge, the stablecoin infrastructure company, and owned essentially by Stripe, which everybody should be very familiar with Stripe, the massive payment company, has officially applied for a national trust bank charter with the US under the OCC. If approved, Bridge would become one of the first federally regulated stablecoin institutions operating under the Genius Act, a law essentially designed to unify digital assets oversight at the federal level. The proposed charter would allow essentially Bridge to offer custody services, stablecoin issuance, and reserve management through a single regulatory framework. Now, why is this important to know that essentially a random company by the name of Bridge, owned by Stripe, which is a massive payment company, decided to get a bank charter license? Why is this important for anyone inside the crypto space? Well, it's just another essentially indicator of fintechs taking over the banking sector, which is what we love to see. The banks losing control and the fintech companies gaining control. Now, European Central Bank is what we're going to talk about next on tonight's live. The European Central Bank digital euro may affect bank stability. So European Central Bank, just like any other centralized bank around the world, is coming out, obviously, with their own CBDC. As much as some centralized banks around the world would say, no, we're not going to be releasing CBDCs, or CBDCs are going to work alongside fiat, for example, or we're just looking into CBDCs, we're not really going to implement them. Oh, no, because we care about your privacy. It's all lies. Absolutely, every single one of them is absolute lies. The European Central Bank has issued a warning stating that the implementation of a digital euro could potentially drain hundreds of billions from banks in the Eurozone. You know why? There was a man from the Bank of International Settlements about 3 years ago. He came out and he essentially was one of the heads or board members in the Bank of International Settlements. And he came out and said, if countries decide to introduce CBDCs through their centralized banks, then people will run to the banks and take out their cash, which will cause a bank collapse. That is why the European Central Bank has issued a stern warning stating that if we do implement the CBDC, it's not if, they will implement the CBDC, then banks are going to be in trouble because people are going to panic and they don't want digital money, the retail section, and they're going to run to the banks to get their money out. There's a reason why during COVID they started closing down bank branches. If you haven't realized by now, there was a reason why in COVID they started closing down banks. A COVID virus has nothing to do with the banking sector, but they closed down banks and ATMs. As time progressed, more banks and more ATMs, cash points, disappeared from where they used to be, because we're getting ready for that digital world. There's a reason also why essentially HSBC Bank, Barclays, Lloyds Bank, Santander, NatWest all said by 2027 there's going to be no more banks on the high street. So, this development may reshape Europe's financial landscape, posing challenges for traditional banking sectors while potentially enhancing digital systems and monetary sovereignties. The European Central Bank essentially warns that the digital euros could potentially shift essentially hundreds of billions from traditional banks. This highlights the significant impact a essentially central bank digital currency may have on the European financial ecosystem. Because if you thought inside the retail section, they're going to be ending it with digital cards, you are very mistaken. Digital cards, ID cards, will lead to social credit systems, which will lead to CBDCs. In its reports, the European Central Bank underscores the importance of digital euros and maintaining monetary sovereignty. Now, the key figures, for example, like Christian essentially Lagarde, have been instrumental in this project, aiming for adaptation to digital payments landscape. The European Central Bank head, Christian Lagarde, they've tried for the longest time to replace her, remove her, vote against her, and they failed every single time because politicians, retail section, everybody needs to come to the realization that what's about to happen next regarding the world going digital, nobody can stop it. Not if you're a politician, a prime minister, or a president. This is something above these types of people. The introduction of a digital euro could impact banking by potentially reducing deposits and increasing resilience on central bank money, which is absolute facts as well. When CBDCs do come out from the centralized banks, we don't really need other banks anymore, because we will have cryptocurrencies too. If you have cryptocurrencies in a digital world, then you can just send wallet-to-wallet transactions. You don't really need a Lloyds bank account or a HSBC bank account or a JP Morgan Chase account, because you can just send wallet to wallet if you have crypto. And if you don't have crypto, then you would have CBDCs, which your centralized banks would be giving it to you, which means you don't really need third-party banks. Christian Lagarde, the president of the European Central Bank, stated, "The digital euro will help preserve monetary sovereignty and adapt to the changing landscapes of digital payments. This may lead to changes in how banks operate and feature in the financial stability discourse. Financial implications might include adaptation costs comparable to essentially implementing revised payment services and regulations. The European Central Bank's reports dispute excessively high estimates, suggesting a moderate financial adjustment for stakeholders involved. With countries like Sweden and China exploring CBDCs, Europe's foray into digital currency reflects a global trend. 98% of centralized banks are in CBDCs at certain stages. That's according to the Bank of International Settlements and the International Monetary Fund. The digital euro focuses on enhancing strategic autonomies while ensuring privacy and security. There is no privacy in a digital world. The digital euro's launch could essentially catalyze shifts in the banking landscape, driven by data, backed by analysis, and involving payment dynamics. This trend necessitates essentially significant regulatory frameworks supporting evolving monetary systems in the digital era. So the European Central Bank warning that the moment we go into CBDCs, banks, other banks that aren't centralized banks, are going to get a massive blow, because people will start using CBDCs through the centralized banks and crypto wallet to wallet, which means the other banks don't really have a future according to what the European Central Bank is saying, which is true. Now, Donald Trump and Xi Jinping. So after Donald Trump put out a tweet, which everybody saw, which crashed the market space, which was regarding tariffing everything China has 100%, which then the crypto space had the biggest liquidation we've ever seen to date. Now, people are estimating it at $20 billion, but it was roughly 9.66, essentially, from essentially CoinGlass data. On X, people are saying $20 billion of liquidations. According to actual CoinGlass data, it's about 9.66 billion, which is still the biggest we've had inside the crypto space. The other biggest we had inside the crypto space was 8.6 billion, which was China banning Bitcoin mining back then, and then the COVID situation and so on. So After Trump put pressure on the entire world and turning everyone against China in the entire world, because essentially the US showed it doesn't need missiles to show strength or nuclear power to show strength. The US can just crash the world's economy whenever they want. And that's the strength they have. Because he definitely showed it on the weekend when he put out a tweet saying China was about to pull something on the side and Trump was not happy about that and decided to essentially pull the rug from underneath China first and turn the entire world against China in terms of world leaders. Because if any country was thinking about joining China to go against the US, is now going to think twice about it. Because if Trump can just crash the entire world economy with a tweet, and let's just say the markets did exaggerate it by crashing it even further, but if essentially the US is capable of doing that, then every country that's thinking about joining China in some sort of a way to go against the US is now going to be thinking about it twice. Because the US doesn't need missiles and it doesn't need nuclear power to show strength. It would just crash your economy, which is even worse than getting hit by a missile for a government. And that's why Xi Jinping and essentially Donald Trump are going to be meeting very soon, because China's president realized that he really has no power and that Trump does hold, in fact, all of the power. US President Donald Trump stated relations with China are good now after he crashed the entire world's market. But that caution is necessary. Sending new messages regarding the trade tensions between the two countries, I think our relationship with China is good, Trump said. We have a great relationship with President Xi Jinping, and while it can get tense at times, we need to be careful. Because China is obviously not a weak country. It's a very strong country, but nowhere near the US. Trump's statement follows a recent warning from US trade representatives. Jamieson, essentially, who said Washington could impose tariffs of up to 100% on China on November 1st or earlier. These statements have caused an estimated $2 trillion in losses over the stock market. Trump also essentially criticized Spain for not contributing enough to NATO, spending, I think Spain has been disrespectful towards NATO. That's why I've considered imposing trade sanctions. In other words, tariffs, he said, emphasizing that he's very unhappy with Spain's stance on defense spending. So he's not only tariffing China right now, he's also tariffing essentially Spain for not contributing enough to NATO, which I understand where Trump is coming from. Because if Spain gets attacked, it expects NATO to come in and rescue Spain. But then if Spain is not spending money on maintaining NATO, then it's unfair to the rest of the countries in NATO to always be bailing out Spain. So everybody should be paying their essentially share. So Trump does have a valid point. If you are a part of NATO, then you should be contributing the exact amount as everybody else. Nothing less or nothing more. If you want NATO's protection. Not when you get hit and you haven't paid your bills and begging for NATO's protection, where other countries have to spend billions of dollars saving your ass. So I fully understand where Trump is coming from regarding the Spain scenario. But regarding the tariff situation on China, it was definitely over-exaggerated on the market space. We almost have to look at the timeline. What's happening next is going to be regulations, which is the Clarity Act, which is going to bring utility towards the table for the crypto space. But before we get utility, we had one of the biggest crashes we've ever seen inside the crypto space, which creates a huge buying opportunity for the institutions, for essentially the banks, for whoever has some sort of position inside his utility scale going further on. Because we've had, as I said previously, China and tariff situations with the US, and we have had market crashes whenever time China was announced regarding tariff or essentially the US. But nothing like this. And you could say up to a certain extent it's because Trump said he's tariffing everything that comes out of China. Sure. But again, that shouldn't have happened. A crash, yes. A crash should have happened. But that crash was extremely manipulated. And that's why we need regulations. Because when we don't have regulations, it's like the Wild West. And we can get away from Bitcoin's footsteps, because if we have regulations, we have utility, then XRP, XLM, XDC, HBAR, Ethereum, Solana, AVAX, they can all decouple from Bitcoin and go towards utility. And if XRP is being used 24/7 around the world, and a tariff situation happens, US and China tariffing each other 100, 200%, 500%, it wouldn't impact the XRP ledger that much because it's being used for utility purposes for 24/7 payment transactions around the world. Same goes with AVAX, same goes essentially with HBAR, XDC, XLM, Ethereum, Solana. They will all be in their sectors of utility, and they're being used 24/7 around the world, not just by the little crypto space that we have, but the entire world. 8 billion people using these blockchains for their utilities. So the next time we have that type of scenario happen, because those crypto projects that have utility are in utility 24/7, they won't be impacted by that news. But unfortunately, because we don't have a Clarity Act, because we don't have no regulations, and everybody follows Bitcoin's footsteps, it's like holding a TV remote. You know, the institutions and the banks, the ones that manipulated essentially the crypto space, it's like they're holding a TV remote. And when they press up on Bitcoin, everybody goes up. When they press down on Bitcoin, everybody goes down. But if we get utility, that TV remote of Bitcoin up, Bitcoin down, everything follows, stops working because we have regulations and everything's in the utility now. You know, there's an old saying essentially, which is the bulls and the bears will always win, and the pigs in the middle will get slaughtered. That's like a quote from essentially Wall Street. There's also a quote from Money Never Sleeps. But essentially, that's what happened on the weekend. The bulls and the bears were headbutting each other, but they were walking out with piles of cash, while the retail was being slaughtered in the middle. It's because the market is heavily manipulated. And we need to stop the manipulation, but we need regulations to stop the manipulation so we could go into utility and we stop following Bitcoin's footsteps. This ideology, essentially, this ideology of, you know, digital gold, it doesn't react like gold. I don't know, for crying out loud, who is still calling Bitcoin digital gold, because it doesn't react like gold. When we had this massive crash, gold was laughing its head off in piles of cash. Bitcoin was in the dumpster. And Bitcoin is known as digital gold. Where is this reaction of digital gold everybody keeps on talking about when it comes to Bitcoin? Because honestly, the rest of the crypto space is tired of Bitcoin's footsteps, because it doesn't react the way it's supposed to. It doesn't react like a risk-off asset, as some people have called it. Risk-off asset is Bitcoin. A risk-off asset is gold, not Bitcoin. Bitcoin is essentially 100% risk-on asset, 1 billion% risk-on asset, to be fact. So I've never seen this digital gold reaction from Bitcoin that everybody keeps on talking about inside the crypto space, because where is it? Where is this digital gold everybody keeps on talking about? Because it's sure as hell in Bitcoin. Because it doesn't react like one. And the Bitcoin maxis will stay very quiet on that matter because they can't prove it, because what I'm saying is absolute pure facts. Any war that happens, Bitcoin goes, gold goes. Tariff situations happen, gold goes up, Bitcoin goes down. China tariff situation with Trump yesterday on the weekend, Bitcoin goes down, gold goes up. But yet, it's digital gold. What it is fool's gold. Now, Citibank is what we talk about on tonight's live. Honestly, this is why we need regulations so bad inside the market space. Because I'm tired of the institutional banks using a TV remote to press up, down on Bitcoin, and everybody else follows their footsteps. We need regulations, and we need them now, to be fairly honest, and we should be getting them very soon. But we just need those damn votes from the Democratic Party, 4 or 5 votes from the Democratic Party, to get the government shut down, done with, so it opens back up and we could continue forward. Unfortunately, dealing with Democratic politicians is like dealing with children, immature children, to be fairly honest. Now, Citibank positions for direct crypto custody with dual tech strategy. The institutions are still joining the crypto space. They're still expanding inside the crypto space. Because the further we go, we are going towards this digital world, no matter what. Nobody can stop it whatsoever. And more, every single day, we are hearing news of institutions expanding further and further and further inside the crypto space. And one of them essentially is today, Citibank. Citibank plans to enter the crypto custody market space in 2026 after essentially nearly 3 years of infrastructure developments, according to Biswarp, essentially the bank's global head of partnerships and innovations. The build traces back to regulatory shifts under Trump's administration, including the Genius Act. Citi intends to hold native digital assets for institutional clients rather than using tokenized exposure. This approach places the bank in small groups of major institutions preparing to manage digital holdings directly. He also said the bank is developing its custody platform through internal architecture and third-party tools. He noted that certain asset classes will rely on in-house systems, while others may use lightweight external frameworks. This structure allows flexibility across client segments without committing to a single-day setup. The plan essentially differs from peers that rely heavily on fintech custodians. The move also essentially aligns Citi with early adopters among major banks. BNY Mellon, Deutsche Bank, and Standard Chartered already built or tested digital custody services, which some of them are actually partnered with Ripple through Mexico. Analysts expect Citi's entry to increase competition with State Street and BNY Mellon, which support asset managers moving towards crypto. These are big, heavy names, all moving towards crypto or expanding inside the crypto space. All the institutions. Recent federal decisions now allow regulated banks to handle digital assets without first seeking approval. Agencies, including the Federal Reserve, the FDIC, and the OCC, removed earlier requirements, clearing the way for broader participation for institutions to connect to banks. And essentially, regarding the crypto space, the Genius Act also created rules for stablecoins, giving banks the authority to issue and hold them and trade them. The Treasury Secretary Scott Benson has said, essentially, in the legislation that could expand the market space to essentially $1 trillion regarding stablecoins. Now, Citi's work unfolds alongside Citi Token service platform. Nobody inside the retail section can buy Citi Token. If you do see Citi Token on CMC, it's fake, it's not real. Nobody from the retail section can buy it. Citi is assessing essentially stablecoins regarding essentially the stablecoin use in regions with limited financial infrastructure. We've essentially said the fiat-pegged tokens could offer payment support in underdeserved markets. The bank has invested essentially in BVNK, a stablecoin infrastructure provider, through Citi Ventures. Additionally, Citi plans to join a consortium essentially of European banks working on regulated euro tokens for launch in late 2026. Scott said, essentially, Citi's US equity strategist said, interest in Bitcoin and Ethereum, essentially, and other cryptocurrencies remains strong among institutional investors heading into 2026. He pointed to those assets as hedge, essentially, options for equity holders, which aligns with custody demands for hedge funds, family offices, and asset managers. Those groups cite, essentially, security wallet management and on-chain verifications as central banks' essentially requirements. So, Citibank is going to be expanding inside the crypto space even further regarding the stablecoin sector. In 2026, Citi wants to be a part of Euro's digital currency also. And according to Citibank's lead strategist, Scott, that institutions are still more eager to get involved in the crypto space than ever before. So the interest for the crypto space is still there, and it's going to remain there going forward as well. It's actually going to be expanding further on. Now, New York, just to give you an example of, essentially governments, institutions, and banks day by day expanding inside the crypto space. New York City Mayor. The New York City Mayor, Eric Adams, announced today the establishment of the essentially digital asset and blockchain office in a bid to cement his crypto agenda in the final months of his term. In a Tuesday essential notice today from the mayor's office, Adams said he has used an executive order on this authority to create the Office of Digital Assets and Blockchain Technology. Moses, essentially, who has already worked as a digital asset and blockchain policy advisor for New York since April 2024, will head this newly established office in New York. He said, our city has always been the center of innovation, and we're embracing the technologies of tomorrow today, said Adams. The age of digital assets is here, and with it comes the chance to grow our economy, attract world-class talent, expand opportunities for the underbanked communities, and make governments more user-friendly. Adams rose to prominence for many in crypto industries after offering to accept his first 3 paychecks in Bitcoin while running for mayor back in 2021. During his term as mayor, he essentially also established a digital advisory council, also giving out bit licenses to, and the New York essentially city mayor announced in September that he would not run for re-election after his initial essentially campaigning as a Democrat and then essentially as an independent. He's not running again, but he has done something great in his last few months of term, which is essentially bringing something positive towards the crypto space by New York establishing a head office for the crypto space. That is tremendous work. Honestly, to be fairly honest, the man wasn't a great mayor, from what I hear. I'm not a New York citizen, but at least he's doing something good before he exits out the door, expanding more inside the crypto space. Now, in essentially the past month, we saw a sit down with essentially Trump and the UK Keir Starmer. If anybody saw the Keir Starmer and the Trump incident essentially happened yesterday, it was absolutely hilarious. Trump was giving a speech on essentially the ending of the war, which is great. Ending of any war is always good to hear because nobody likes the idea of innocent people being hurt. So, thank you, Trump, honestly, for ending this war and bringing it to a complete halt and to a complete ending. But the part that was quite funny was when Trump was essentially reading out country names and saying, Italy did this for essentially this deal, and essentially Egypt did this, and Pakistan did this, and this country did this, and Norway, Finland. And when he got to the United Kingdom, he said, and the UK did this, and Keir Starmer, the Prime Minister of the UK, which nobody respects, was standing behind him. And Keir Starmer thought, well, this is an opportunity for the UK to come and speak on the mic. And he tried to go essentially forward, shake Trump's hand, and tried to speak, which then Trump just stood right in front of him and continued talking, which then made Keir Starmer blush and go back to where he was standing. Honestly, the UK loved seeing that. Genuinely loved the idea of seeing that. Now, the US and the UK, regarding their crypto, essentially, sit-downs that the technology sit-downs they had recently with Trump coming to the US, with Trump coming to the UK, well, we're starting to see some sort of action happening on that side now. So the first action is that the US and the UK have taken down a Southeast Asian scam network. So the joint venture the UK and the US right now have regarding the crypto space, the cybercrime space, and so on. Their first actions, one of their first actions, has been being able to take down a massive cybercrime, essentially criminal groups in Southeast Asia who have run away with millions of pounds or dollars of people inside the crypto space. The people that lose their money inside the crypto space because to a scam phone call saying, we're calling from Coinbase or, crypto.com or Binance, and people lose their assets like that. And these are the people that are doing it to them. So the United States and the United Kingdom have carried out their largest ever coordinated crackdown on cybercriminal networks operating across Southeast Asia, targeting crypto-linked money laundering and online scam operations. The US Treasury Office of Foreign Assets Control, actually the OFAC, and the Financial Crimes Enforcement Network, the FinCEN, alongside the UK's Foreign Commonwealth and Development Office, FCDO, announced a sweeping sanctions and enforcement actions against two major networks, the Cambodian Prince essentially Group Transactional Criminal Organization, and the TCO and the Huni Group, essentially. And according to the Treasury, essentially, they laundered over $4 billion in illicit crypto, essentially, and fiat proceeds between 2021 and 2025, including millions tied to North Korean cyber heists and Southeast Asian pig butchering, essentially, scams. The US losses, essentially, to online investment scams have steadily increased over the last several years, totaling to this is how much US citizens have lost regarding scams. $16.6 billion regarding cybercrime scams. Today, the US and UK have taken the largest action ever targeting cybercriminals in networks in Southeast Asia, some of which engaging in also some other activities, illicit activities, which I won't be mentioning on this live, but some other illicit activities. You can picture that for yourself. The crackdown follows essentially mounting losses from crypto-related scams, over $16.6 billion since 2023. According to US officials, these schemes often use digital assets to obscure cross-border transfers, exploiting decentralized platforms and stablecoin liquidity pools to move illicit funds globally. The Treasury Secretary Scott Benson said the operation represents a major step towards dismantling the global, essentially, group of infrastructure of financial crime that uses crypto as essentially its commodity. The FCDO imposed parallel sanctions on Chen Zin and his network, while the US prosecutors in New York unsealed the indictments alleging the Prince Group used essentially shell companies and offshore wallets to essentially counsel the criminal revenues. Now, the Huni, essentially the other group, Crypto processing role further linked both networks, revealing how centralized banking systems and blockchain rails have converted into hybrid laundering pipelines. Now, there was a lot of money also moved, if I had to guess, in USDT, because it typically is. We'll get more updates as news goes along. As regulators increasingly coordinated between jurisdictions, financial crime frameworks are being expanded to cover digital asset intermediaries and tokenized real assets and on-chain securities. So, one of the biggest cybercrime criminal groups the world has ever seen, the largest on a global scale, has now been taken out. So, hopefully, less people will get scammed inside the crypto space because too many have. Now, BlackRock is what we're going to talk about next on tonight's live. BlackRock's CEO, Larry Fink, if you haven't seen it, he did a few interviews today as well. Larry Fink eyes a bigger role inside the crypto sector, which is tokenization. He loves the idea of tokenization, and so does any other institution out there. BlackRock CEO Larry Fink said the digital asset market, including stablecoins and tokenized assets, will grow significantly over the next few years. BlackRock, essentially the asset manager giant overseeing more than $13 trillion of assets, is ramping up efforts to bring traditional finance, TradFi, on-chain, seeking to essentially a bigger role in tokenization as a way to unlock access to markets and streamline also assets that are trading. Teams across the firm are exploring how to use tokenization to make markets more efficient and accessible, with leadership hinting at a bigger essentially moves ahead. CEO Larry Fink said during his earnings call, forwarding its earnings release essentially, he said, "I do believe we have some exciting announcements in the coming years on how we could play a larger role on this whole idea of tokenization and digitalization of our assets," said Larry Fink. Now, Fink also said that he sees digital assets as a market currently with over $4.5 trillion and growing significantly over the next few years. This is BlackRock's CEO saying to everybody that the crypto market space, even though it's sitting in trillions of dollars, it's going to grow even further in essentially this year and the coming years and so on. The asset manager is also behind the largest tokenized money market funds on the market space, $2.8 billion. BlackRock's essentially USD Institutional Digital Liquidity Fund, the BUILD essentially ticker, issued a tokenization specialist securities and available across various blockchains. Also, BlackRock's AUM, essentially assets under management, grew to $13.4 trillion in the third quarter of this year, up from $11.4 trillion in the previous year. The firm reported $61 million in revenue, essentially, from its digital asset products, only a fraction of the company's total revenue of $6.5 billion per their earnings release. BlackRock shares traded around 1.5% higher during market trading on Tuesday. Now, BlackRock CEO Larry Fink also did an interview today. I don't know if anybody's seen it. He did two essentially interviews. One was on CNBC, one also was with essentially 60 Minutes. With 60 Minutes, he had the interview, and the interviewer asked the question of, didn't you used to say, crypto is a scam, it's a Ponzi scheme, it's a pyramid scheme? And he said, yes, but he said, the markets have shown me that, perspective can change, is what he said essentially. And then he said he's happy with the Trump administration so much that he's putting America first. BlackRock is also trying to put America first now. And he was tired of what was happening to the United States. Interesting enough, JP Morgan also came forward, and said, on the same lines, JP Morgan's CEO also came out, Jamie Dimon also came out and said that they're putting $10 billion into the American First section, which Trump has created, to bring more American startups, that to expand more into American startups and American innovation of data and AI and blockchain and so on. So all the big names are coming around and they're putting America first now. During Biden's era, everybody was putting America last, including BlackRock, Fidelity, JP Morgan, Goldman Sachs, the list goes on. But now they're all putting America first. That should tell you something, that Trump is doing something right. But also BlackRock mentioning how tokenization essentially is key in that spectrum. Brilliant. Love the idea of BlackRock always being involved in that sector. Obviously, we know why institutions love tokenization, because later on they don't need to go to a bank to borrow money to build a brand new shiny building. They could just make the project a tokenization project, and everybody else from the retail section could buy parts of it and essentially build the building for them. But BlackRock is not the only one that mentioned tokenization today, and also, they weren't the only ones doing interviews talking about the crypto space in a very positive light. Also, Citigroup's CEO backs tokenization deposits also. So says too much focus on stablecoins are going on, and we need to be expanding further inside the crypto space beyond stablecoins. Speaking on her bank's earnings call, Citi CEO Jane said tokenized deposits offer faster, safer infrastructure and fewer AML and compliance burdens for the next era of digital finance. Citigroup CEO, essentially Jane, offered a clearer stance on future of digital finance, telling investors that tokenized deposits, not stablecoins, will be primary engine behind next generation payments and financial market infrastructures. Speaking on investor calls following the bank's third quarter earnings released on Tuesday, essentially, Jane explained that institutional clients are asking for seamless, real-time cross-border money movements and is low cost and compliant. What our clients want is interoperable, essentially multi-bank, always-on payment solutions provided in a safe and sound manner, she said. That is best done by tokenized deposits. Citi has invested heavily in digital asset infrastructures, including its own 24/7 US dollar clearing network, and Jane said that the bank's tokenized services can now link to over 250 banks in more than 40 markets, enabling clients to transfer funds instantly to suppliers and third parties. However, she also noted that the biggest bottleneck, essentially the broader adoption, isn't technical, but that many corporate treasury departments are not yet ready for a 24/7 financial environment. With Citi will essentially continue to support stablecoins, offering on and off ramps, custodial services, and cash management for stablecoin providers. Friese emphasized that they come with more essentially operational friction that includes regulatory burdens around anti-money laundering, AML, tax reporting also, and accounting. These other requirements are essentially what our tokenized deposits capabilities avoid, she said. Friese has previously said that Citi essentially is also exploring the possibility of issuing its own stablecoin, but she has essentially cautioned against overhyping the asset class. There's an overfocus on stablecoins at the moment, she said. Most of this is going to get solved by tokenized deposits and capabilities. Looking ahead, essentially, Jane sees tokenization expanding far beyond payments. She pointed to a future where the issuance and the settlements of everything from oil to equities happens on tokenized rails in a regulated, trusted environment. The key, she said, is that regulators are beginning to enable responsible innovation, and we will be providing that as a part of our toolkit. Also, it's terrific, essentially, that regulators are now letting us innovate in a responsible way that will really help the development of the market space. Now, you might be thinking to yourself, well, if the world is going to be going crypto, wallet-to-wallet transactions, why are these banks still excited in that sense? Because according to European Central Bank, banks should be worried about the world going digital because centralized banks are only needed, not really other banks, because people could do CBDC payments for centralized banks and then also crypto wallet-to-wallet. The only reason some banks will exist in a digital world is because people prefer the safety of banks. So the same reason you would ask yourself, why is someone buying a Bitcoin ETF and not Bitcoin itself? It's the safety spectrum. Also, it's the lazy asset. It's the lazy scenario as well. So in a sense, if you want to do wallet-to-wallet transactions, you always have to make sure your wallet is secure, essentially by yourself, not click on random links and so on. So it's about the protection of you protecting your own assets. The reason why some banks will exist is because some people don't really want to learn about the crypto space that much. They just want to be a part of it so they can still make purchases and so on. And they'll rather just have all of that being handled by banks. That's why some banks will survive and some banks won't survive this at all. And it's just to do with the old school traders and essentially the older generation. Depends. The younger generation might also prefer the safety of banks as well. But I just prefer the idea of, being in control of your own assets. Some people don't like that. Some people like the idea of somebody else making sure their assets are safe. And some people like the idea of making sure their own assets are safe. So it just depends on which side people are going towards. But that is one of the reasons why certain banks will still exist and certain banks won't. The ones that won't because of liquidity issues. Now, Ripple is what we're going to talk about next on tonight's live. Before we talk about that, let's go to the comment section first. Let's see what's happening there, and then we'll go straight into the next news. Let's see where we're at. Both the Senate and the House of Representatives are responsible for the shutdown. I agree, 100%. Miles, can you please look into CrepCoin on Binance and Pancake? Sure. Funky, send me a message after the live. I'll take a look at it and get back to you. No problem. Robin says, will we season or not? And if the answer is yes, when do you think it could happen? Because right now it's really bad. Right now it's only bad because it's heavily manipulated. You go look at the bigger picture. The bigger picture is the Clarity Act. Once that comes through, there's an off chance that the market will go down because Clarity Act is supposed to be excellent news for the market space. It means utility. It means that people, crypto projects can detach themselves from Bitcoin's footsteps. And when that gets passed, there might not be good movements. The market space might become volatile. It's only because, as usual, it's manipulated in that sense. But after that, we should be on the good, essentially on the good side of the market space. But the timeline, essentially, are we going to have an alt season? Yes, in my point of view, 100% yes. Are we going to be having essentially the Clarity Act passing anytime soon, essentially this year especially? Yes. Is the government shutdown situation going to come to an end? Yes. But it does depend on the Democrats because we need 4 or 5 more votes. The Republicans are pretty much all for it. It's just we need 4 or 5 more votes from Democrats. So, the Democrats will have to come around sooner or later. I mean, Trump was able to end a war between India and Pakistan, a war between Israel and Palestine, just the Ukraine situation left, but he was able to end the war. So, I mean, he could come to some sort of an agreement and conclusion with the Democratic Party. Now, so always look at the big picture. Don't look at, as one of my father's quotes, don't look at the tip of your nose, look further on. You'll see the bigger picture. Don't forget, most importantly, of what's going to be happening next after the Clarity Act. It's going to be regulations, utility, and then from there, Mars or the next galaxy essentially is the limit. If you was to facts, let's go, Ray. If you was to hazard a guess, in what year do you think XRP will flip BTC? Interesting. When do I think XRP will flip BTC? A few things have to fall into place. So far, we only have one green light. But a few things have to fall in place, and then after the momentum, 100% it can. Look, here's the thing. I won't give you a timeline, but I will give you an answer of, do I ever think it's going to happen? Yes, 1 billion%. I won't give you a timeline on essentially because a few things have to fall in line. But the question of, do I ever think it's going to happen? Do I ever think XRP is even going to come close or have a chance of replacing Bitcoin? Yes, 1 billion%. One day will come where XRP is able to replace Bitcoin. And that's going to be after regulations, not before it. Miles, I need to run. Thanks for great news. I'm glad to see you back. See you tomorrow. Free and forever. See you tomorrow, but same time as usual. What up, Miles? Miss your brother. Let's go. Christopher, good to see you. How you doing? Miss your brother. Let's go. Miles, what will happen to XRP ETFs? Only 4 days left. I don't know if the XRP ETFs timelines haven't changed because it's the old filings. Essentially, people are still showing the timelines of. I don't know if people have updated their timelines because the old filings, due to this government shutdown situation, we don't know if the SEC is going to make it an emergency scenario to pass them through. So we have to see, but I have to double check the XRP, not just XRP, but all the ETF timelines because we're going that fast track. Because the SEC said we're doing a fast track, which means everybody has to reapply through their S1s again and forget the other one. So the timelines could have changed, or maybe they haven't changed. I do have to double check them first. We're going a whole 4 days more scenario situation as well. I also did explain to everyone that if we don't get an answer from the SEC and the timelines do pass due to a government shutdown, technically those ETFs can be green-lighted, but they can be halted afterwards by the SEC as well. But there has to be genuinely a good reason for that to happen. So they can actually just pass through now that there's a government shutdown. Now, Ripple pays to attack the XRP ledger. Ripple has put a reward of $200,000 to any hacker out there at the hackathon to hack essentially Ripple regarding the essentially XRP ledger of the newest update that's going to be coming along. which I think it's a brilliant idea. Because if nobody's able to, it would show the world who is resilient in terms of blockchain infrastructure. Because who else is doing this? Because if you want to show you're the best, then prove it. And that's what Ripple is doing. Ripple X has put a sharp point on its institutional DeFi roadmap by inviting the security community to actively break the XRP ledger, forthcoming lending stack. Remember what I said at the beginning of this live show regarding Sonic's CEO, talking about how in times when it matters, can these blockchains actually survive? Well, that's what Ripple is doing, showing the world that even under pressure of global hackers pretty much trying to hack the XRP ledger, it's still not going to be able to break it. Its DeFi roadmap inviting security communities to actively break the XRP ledger's forthcoming lending stack before it ships. Now, in a coordinated program with essentially Unified, the company unveiled $200,000 hackathon as an attackathon, essentially, aimed at hardening the proposed XRP ledger's lending protocol, a ledger-native system for fixed terms, the XLS66, which we talked about in the past. Now, we are collaborating with essentially the Immunify to prepare a $200,000 attackathon to test and strengthen the proposed XRP ledger's lending protocol. Ripple X wrote essentially on X, adding that the competition focuses on more than the 35,000 lines of CC plus code, and essentially is paired with essentially educational tracks to onboard researchers to the XRP ledger. The attackathon is essentially preceded by an XRP ledger attackathon academy that essentially Immunify says provides ledger-specific workflows, guides, test environments, and a C++ essentially curriculum, plus direct access to Ripple engineers during the education window. The program's core essentially pool totals to around $200,000 with a flat distribution rules and performance bonuses. The most essentially consequential result is binary. If even one valid critical vulnerability is found, the pool unlocks. If not, a $30,000 fallback is split among researchers who nonetheless submit valid insights. Immunify's public essentially brief also names the primary in the scope components targeted by researchers, including the XLS66 lending protocol, the XLS65 single asset essentially vaults, and the XLS33 multi-purpose tokens, and the XLS70 credentials, and the XLS77 deep freeze, and the XLS80 essentially permission domains. A window into how Ripple envisions leading, liquidity, identity, permissions, and asset controls interlocking at the base level. Immunify's launch block lists the education period as essentially October 13th to 27th, and the attackathon essentially as October 27th to November 29th, 2025. The Academy page further specifies rewards paid in RRUSD, Ripple's dollar peg stablecoin, and confirms the Unifies will trigger essentially reports and require KYC. Now, Ripple has been essentially telegraphing this architecture throughout September, positioning XLS65 and XLS66 as the nucleus of an institutional credit market built into the ledger rather than essentially stitched on via external smart contracts. The company's own technical brief describes the pooled lending on-chain enforcement and underwritten off-chain essentially credit evaluations, while essentially adjustment standards, permission domains, deep freeze, and credentials are designed to map compliance, recoverability, and identity controls to ledger native primitives. Everything the XRP ledger essentially is offering is exactly essentially what the banks offer to the retail section, to the institutional sections. Because if the blockchain sector wants to compete with banks when it comes to finance, they must offer the same things that the banks do offer to the retail section, to institutions, in their own blockchains, which is exactly what the XRP ledger is offering. The security's first rollout reflects a broader industry shift towards a pre-production offense, testing on non-essentially EVM code bases at the protocol designs where conventional smart contracts and bug classes don't always apply. Immunify's brief makes essentially clear what matters most for the XRP ledger stack. Anything that compromises essentially fund security or vault solvency, misrepresents essentially interest or debt essentially, and freeze segments, manipulates essentially administration records, or bypasses permission access controls. These priorities map directly to the design's claim to avoid wrapped essentially assets and third-party contracts, meaning the bounty essentially effectively challenges researchers to find ledger essentially level logic flaws rather than solidify style pitfalls. This program is also time box and advisory competition to ensure the protocol has strongest possible security posture, surfacing vulnerabilities before they reach production, essentially unifies roads. So Ripple X offering the chance for anybody that wants to break the XLS66 essentially to show that, is the XRP ledger as secure regarding the XLS66 is as secure as it may seem to be. There's a $200,000 reward if anybody's able to break it. I mean, that is one way to show the world that, the XRP ledger is resilient. 100% it is. Because if you're doing challenges to see who can break your chains or who can bring your updates, on that matter, simplest way to put it, on your chains, then you're showing your strength. That's exactly what Sonic's CEO said, which is, can blockchains, forget about who's the fastest or who's the cheapest, can blockchains actually work during times of incredible uncertainty or incredibly challenging times? Can these blockchains actually operate? And that's what matters to essentially institutions and governments. Not really who's 1 second faster than the other blockchain. They couldn't care less about that. All they care about is, during intense, challenging times, can blockchains survive everything thrown at them? And that is what Ripple is proving with this, that it is capable of doing it. XRP futures hit record milestones essentially aimed at these strong institutional demands in Q3. So the reports have come out regarding, essentially, moving on to this, regarding the XRP futures, because a new report has come out. So CME Group has set a remarkable milestone for essentially XRP futures, reaching a staggering $23 billion in notional value for the third quarter of 2025. The surge in demand for regulated cryptocurrency exposure has been significant, as both institutional and retail investors show heightened interest in cryptocurrencies beyond Bitcoin and Ethereum. XRP futures, essentially beyond Bitcoin and Ethereum, regarding XRP futures. XRP futures in particular have seen exceptional growth, with the XRP and micro XRP futures suite having traded over 476,000 contracts since its launch back in May, accumulating more than $23.7 billion in total notional value. This surge has also translated into record-breaking open interest of essentially for XRP futures, which recorded at $1.4 billion back in September. Now, notably, CME Group's XRP futures saw a new high in terms of largest numbers of contracts open at a given time, reaching a level of open interest very high, essentially around 29. Now, in a exciting development, CME Group officially launched also options trading for XRP futures on October 13th. This includes both larger and micro-sized contracts, providing a new level of flexibility for traders. After CME Group realized the true potential of XRP with XRP futures, they decided to expand further into the XRP. Regarding the XRP, essentially offering services to institutions or to essentially anyone that wants to go through CME. The launch of options trading on XRP futures marks a significant milestone, with CME Group being the only platform to offer CFTC-approved XRP options in the US. This new offering is expected to further enhance the capital efficiency and trading experience for institutional and retail investors alike. So after CME essentially realized that, there's actually huge interest for XRP in terms of the institutional sector or the retail sector that's going through CME regarding the book holders, they decided to further expand into it. Look, what I would have to say is, what we experienced inside the crypto sector on the weekend, which everybody saw if you're inside the crypto sector, is that we saw manipulation at its highest peak. Yes, Trump tariffing China on everything is huge news, humongous news, massive news, and the market would react negatively to that scenario. But a few things didn't add up. One, gold up, digital gold was down. As usual, Bitcoin was sticking his head in the sand, pretending that, nothing mattered. Let's be honest with ourselves. Two, the tariff situation on China, which we've had before, impacted the market space, not at that level. This one, you could say it was tariffing everything. That's why it was at that level. It still doesn't add up. 3, the timeline essentially next is the Clarity Act, which means regulations, which means utility, which means liquidity, which means institutions and banks come forward because of the Clarity Act. The Stablecoin Act was, the Genius Act was good for stablecoins, but the Clarity Act is good for everything. So the timeline of the crypto market space having the biggest crash we've ever seen to date, and then afterwards is the Clarity Act, sure, we'll all pretend it was the 100% tariff on everything. And I'm not saying that shouldn't bring the market down. It should, but at that level, that was heavy manipulation on a ridiculous scale. But it just shows you how much the institutions want to shake out the market, to get the weak hands essentially out of the market space and to jump in. The only reason they would crash the crypto market space to that level is because they want your positions. Otherwise, they couldn't care less. Honestly, if you look at the timeline, the Clarity Act is next. The only reason the crypto market space crashed at that ridiculous level on the weekends because of a tariff announcement that we've had in the past regarding China also, and the markets reacted negatively to it. But this one wasn't a crash. It was a tsunami. And that doesn't add up right before the Clarity Act. Honestly, the only reasons the crypto markets crashed at that level is because the institutions want your positions. They want your positions. If you were smart during that time, you would be piling up on things that you wanted more of or you didn't have. If you didn't have money, that's perfectly fine also. Not everybody has, money spare, which is perfectly understandable if you didn't have the money for it. Very understandable, because a lot of people didn't have it. But if you did, good on you, for making that smart investment. If you did have it and you didn't make that smart investment, bad move. Again, not financial advice whatsoever at all. And people who tried to trade the market just got liquidated left, right, and center. Honestly, you try to long the market, it shortens. You try to short the market, it longs. It was just all over the place on the weekend. And too many people got liquidated. But again, honestly, you have to understand one thing. Day by day, institutions and banks are expanding even further inside the crypto space. And we're coming up to the Clarity Act, which is pretty much the final gate. This crash was because they want your positions. It was the biggest crash we've ever had inside the crypto space. Right before Clarity Act. They wanted your positions. On that note, for everyone that did hold strong, honestly, well done to you. On that note, we have also reached the endings of tonight's live. And if they want your positions, it means that you're holding something valuable. If you haven't realized it by now, the only reason why they want your positions, why the institutions and the banks want your positions, is because you're holding something incredibly valuable, depending on what crypto project you're holding. But that's why they want it. On that note, we have reached the endings of tonight's live. If you're watching this for the first time ever, this was called the CMF Live. This was episode 387. It's great to be back doing these live shows, honestly. I'm so happy to be back. Missed you all, genuinely. And this was episode 387. Episode 388 will be tomorrow. And I did this live show after 6 hours and 59 minutes. You can pretty much say I did this live show after a 7-hour journey to get back to London from Scotland. And I did this live show. I am incredibly tired, but I still wanted to do this live show because I did miss you all and I did want to update you on the market space. Now, before we do go, let's go to the comment section first, and then we'll call it tonight. Let's see where we're at. We were here. It would seem big money folks and companies could light a fire on the Congress to open soon. That's also a given. Yep, I would agree 100%. Miles, I don't want to blow your trumpet, mate, but you give so much fantastic information. It's unbelievable. I watch, but I never see as much as you. Well done, buddy, and thank you again. Adi, thank you so much for the kind words, but honestly, thank you so much. I agree. Let's go, Scott. Morning, Miles and CMF. Apologies, I'm so late. I slept in. Shelley, no problem. It's okay. Good to see you. How you doing? Some blaming Binance. A lot of people are blaming a lot of exchanges. Binance is one of them. Good night, Miles, and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, but at the same time as usual. I sent you a few messages, Scott. I'll check them after this live. No problem. Thank you, Miles. See you tomorrow. Mike, see you tomorrow, but at the same time as usual. Thanks for another great live, brother Miles. And welcome back. See you tomorrow. Comatose, see you tomorrow, same time as usual. Good night, Miles, and thank you for another great show. See you tomorrow night. Let's go, Adi. See, funky brother. See you tomorrow, same time as usual as well. Also, Mike, one more time. Honestly, brother, thank you so much for the donation of 25 Canadian dollars. Absolutely amazing, Mike. Thank you so much for the donation. I think they want to move the retailers out of the area. Yep, facts. Let's go, JP. Could the crash have been the reason as to why one of the influencers died as they do something else? It could have, Lena. A lot of things could have played out, I'll be honest. It could be, 100%. Thanks, Miles. No problem. Healthy wealth. Good to see you. How you doing? Congrats on episode 387. Let's go, Scott. Great to have you back, Miles. Missed you too much. Have a good rest. Good night, Miles and CMF. Let's go. And also, thank you so much to everybody who has liked and retweeted this live on X. Honestly, thank you so much to everyone who has liked and retweeted. If you haven't liked or retweeted, smash the like buttons, smash the retweet buttons, and put a comment outside the live on X. And if you're watching this on YouTube, smash the like button as well. If you followed and subscribed during this live show as well, thank you so much, and welcome to the CMF. Junos, Junos, good to see you. How you doing? Great to have you back, Miles, and thanks a bunch for the updates. Have a lovely night all. Let's go, Lena. See you tomorrow sometime as usual. Good night, Miles. Thanks, Callie. Let's go. So glad to hear such words of wisdom after the bloodbath this weekend. Thanks for your dedication, Miles. We love you. We all love you. See you tomorrow, same time. Autistic, no problem. See you tomorrow, same time as usual. Thank you so much for the kind words. Great job, Miles. Good night and get some rest. Let's go, Scott. See you tomorrow, same time as usual as well. Amazing job, as always, Miles. Thank you for the great news. I will see you tomorrow. Carlos, see you tomorrow, same time as usual as well. Oh, come on, Scott. Let's go, brother. I agree. Let's go. See you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual. For the next episode of CMF Live, 10 p.m. London time onwards, episode 388 will be tomorrow. Like, comment, retweet, follow if you already haven't. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a great night wherever you are around the world. See you tomorrow, same time.